Good morning, everybody. This is the Saturday morning Viper Trading webinar. We are here to look at trading futures instruments using the Viper tools. Let's knock out our standard disclaimer and get this thing going. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, without further ado, now we'll get on to some charts here. The topic today was trading gold and oil. However, not everybody trades those instruments. So in all fairness, I think we should look at some other instruments. But let's start with crude. Let's start with crude oil. And let's do it this way. I'm going to do it this way. All right, we're ready. Let's get over screen. Let me sure I got this right. So this should be screen 1, and you should see a crude chart. Testing screen 1. Crude oil, cursor moving around. Everybody with me here? Let me clean this off. I think there's some old notes on here. Where are we here? Drawing tools. Remove all drawing objects. Yes, crude oil, December contract. All right, for those of you that are new, completely new, either in here this morning or watching this recording, what you are seeing is one of the instruments we trade in the live room. Of course, it's crude oil, CL. We're on the December contract now. And our indicators are, of course, the power meters up here. You see those, the background colors, red, green, and transitional. Of course, we have the bar colors, blue, yellow, and red. The most prominent thing, of course, on here is the bands, the mid band. Is the large line in the middle, and then there's 4 bands above, 4 bands below. We have these predictors. These are these sort of oval swings, if you will. In real time, these paint showing support and resistance levels, and of course you can see that when a market is going sideways, they're kind of flat. They're not going too much of anywhere, and when a market's moving up, they're moving up, and when they're moving down, the market's moving down. We are pretty much retracement type traders. You can, by the way, you can toggle those on and off, like such. And one of the main, just to get right to the point of it, one of the main types of trades that we use, and we use an object trader tool that's a panel over here on the right. I'm not going to put that on here today. We have webinars that show extensively how to use that, but one of the main parts of the tool that we use are, of course, the region boxes. Region boxes are, we hit insert, a box appears on the screen, we position it around the midband where we want to take trades, and we trade retracements. So let's talk about a few trades together. Let's see, 10/27 was Friday. So let's get some orientation here so we're all on the same page. So midnight Pacific time would be right here going into Friday morning. So this would be the European session, trading oil, early in the morning here. So just whatever time frame you're in, adjust it to your local time frame. Hey, Marco, good morning. I see a lot of people still coming in. Don't worry, we're just getting started. You haven't missed much of anything yet. We're starting to get, we're looking at crude. We're starting off with crude here this morning. And so our trades look more or less something like this. So here's a couple examples on the left. Now this would have been, let's see here, this would have been Thursday morning over here. 7 o'clock Thursday morning would be here. This is going into the mid-late morning. This is into the close on Thursday, midnight Pacific, and then now we're into Friday, just so we're all on the same page here. So some good examples. Let's look at some examples of trade setups. and we'll do this together. And then what I'm going to do is I'm going to simulate how Friday morning went, and we're going to start doing calls together so that we're able to see these ourselves when they happen come Monday morning. So here's some examples of boxes. Here would be a good example of a region box at the mid-band. This would have been somewhere right around 7:30-ish Thursday morning. Here's another good one here. And coming out of this particular, well, both boxes actually. And the way most of the boxes that we draw are, there's different ways to configure the region boxes with touch, bar close, etc. But one of the main features of it that we like, excuse me, is that when a market is consolidating around the midband, as these two region boxes are right here, that we have what's called this notion of closing outside the box. Now, in this case here, both of these boxes, you could have enabled long and short. What that means is that the toggles in OT, Object Trader, allow you to go long, short, or both. And in this case, so if the bar closed below the box, the region box, you would be filled short on the close of the bar. If the bar closes up, you are filled long at the close of the bar. So for instance, if you had this little box here drawn on crude at 7:30 on Thursday morning, you would have been filled long on that bar right there. If you had this region box, depending on how you had it drawn, if it was tighter, if you had a region box that looked something like this, then you would have been filled long on this bar right here. However, if you had a larger box that was drawn more like this, then you wouldn't have been filled long until this bar right here on crude. This would have been Thursday morning. Here you're going, this took a little bit of time to set up. So for instance, here you're looking at about 7:30 Pacific, filled long out of the region box. And then here would have been way over closer to 8 o'clock. So we would have been closing the room up when this trade's, getting ready to wrap the live room up when that trade's set up. Now that we know that, we are looking for retracements. So between 8 o'clock Pacific and midnight Pacific on Thursday afternoon, Thursday late morning, Thursday, I see two other long trade setups. So what we're going to do here, we're going to make sure everybody's awake, had their coffee, had their breakfast, and you're ready to start looking at trades. Where are the two long trades located on crude oil between basically here? See my cursor. So we already showed these boxes, so these don't count. And here. Now you can type in either a time. There's time down here. So for instance, let me give you an example. You could say 7:31 would be a time. That's when the region box, so that's not the answer. Or a level. So for instance, here's the levels over here. You've got, 52.30, 45, 52.50, etc. So let's give 15 seconds to the team. I see two long trades. Let's see if you can call those out, either from a time, you put two times in, or two levels. Let's start the clock right now, 15 seconds, between here and here. Now remember, we're retracement traders. We don't trade the thrust. We patiently wait for pullbacks. So in other words, the market has to push in a given direction, and then we have to wait for the market to pull back to us to take the trade. So when you're looking at this chart, we have to envision, a thrusting motion. By the way, time's clicking down. You've got 10 seconds to answer. Two long trades on crude. Where are they located? 9 seconds. You can type in a time where you see it, or a level, 52.15, or 52, whatever, 52.80. Just I'm lobbing some examples out there. 7 seconds remaining. Two long trades on crude. Where are they? Michael, yeah, if you have bar close, let me answer. There's a couple questions coming in here real quick while you're answering those long trade locations. The bar closed inside the box. Okay, now the way that works, Michael, is that if you enable bar close and you're inside a region box, then you are filled on the close of the bar inside the box. That's correct. It doesn't have to close outside the box. And you don't necessarily have to have a region box. Once you enable bar close, depending on when you turn it on, let's look at some examples here. Here's a couple examples where bars closed inside of a box above the midband. So for instance, if you had bar close enabled here, yes, you could theoretically be filled long before it broke outside the box. But most of the configurations we do with region boxes are close outside the box. And just quickly to explain that, by the way, I see good answers coming in on these long trades. Almost everybody's getting these long trades perfect. And we'll answer that in just a second. Let me go back to Michael's question. One of the issues, bar close is a good entry. I like bar close sometimes when there's not enough time to put a region box on it and the market's moving quickly and you want to just get in and you don't want to use a market order, because it'll go ahead and when a bar closes up, it'll just bam, it'll get you in, okay? But the risk of that is that, let's say hypothetically you're filled long on one of these bars right here before it broke out, so it's closing inside of here, and then for some reason something happens and the market moves against you, in this case down, and rips down here and gets your stop. Now you're pulled into a trade that maybe you didn't want, and in fact maybe you wanted to be short. So for me personally, when I see a consolidation area just like this one right here, I prefer the close outside the box, because for me personally, I feel like I have I'm more convinced that there's going to be follow through, whereas a bar close inside of a region doesn't necessarily give you the full confidence that there's a continuation move in your direction. So that's the risk of bar close. All right, time's up. Let's look at where these long trades are. Over here, let's see. So a lot of people are coming in late, no problem. So the question was long trades on crude between 8 and midnight. Let's get our little pointer crosshair out here. All right, now notice what we have. We have our thrust. We have our retracement, like such. Now, we had mentioned over here that we prefer trades located with region boxes right around the midband. In this case, we didn't quite get to the midband. So I would suggest to you that the answer for long trade number 1 would be located right here. So time-wise, that would have been around 9:35 to 10 o'clock. So it actually sat there for about 10-15 minutes. So if you answered anywhere around 9:45, 9:35, 10 o'clock, that was the first one. And location-wise, that was 52:30 to 52:36. So if that would, let me look back here. Oh yeah, most of you got that. There you go. Adam, Michael, Peter W., Chris, quite a few. You got this. Hey, Minaj, I didn't see you come in. Byron, Daniel, good for you. Marco. All right, so that was long trade number 1. Now, there is a question come in from Pat. Hey, Pat, how you doing? How many bars does it take to form a good box? So let me just tell you what we're going to do. Let me show the second long trade, and we'll circle back because I see 2 or 3 other questions. Now, here we get our thrust, so the market is continuing higher. If you'd drawn a region box as I show here, you would have been filled long on this bar right here. Close outside region box would have been this bar right here, long. I'm not going to get into how we take profits in scalping and how many contracts and where the trail stops are. I'm not going to get into all that right now. I'll do that a little bit later on another chart. Let's go ahead and look at trade number 2. Trade number 2 was right here. We get a very nice retracement right back to this candle here, which wicks the midband. Just get a wick on the midband right here. We had an opportunity where it paused there for a few minutes and sat right here, allowing us to draw a region box like such. Time-wise, that would have been somewhere between 11:20-ish, and it broke out of the box here at 11:27. So it sat here about 5 minutes. The nice thing about some of these boxes, when region boxes at or near the midband, is that when the market pauses for even up to 5 minutes or more, there's plenty of time for you to consider taking the trade. So in other words, what I'm saying is it's not like crude blasted up here, you know, in a few seconds or a minute, and then powered back down here, and you only had a few seconds to look and take this trade. Quite the contrary. In fact, this market sat here from 11:20 on that candle there and did not break up until 11:26. So you had 5 or 6 minutes. That's plenty of time to position a region box for a long trade. In this case here, I would suggest to you that you, given the fact that you are in an uptrend, you're pretty late into the morning here at 11 o'clock. Most likely you would have enabled long only and not shorts, and you would have been filled long on that bar right there. Everybody see that? Location-wise, that would have been right around the box between 52.45 and at the upper end of the box, 52.50. So right in here. So I see quite a few of you got that. Yeah, so that's the two long trades from here. Now, that being said, let me circle back and answer some of your questions. Hold on a second. Let me position this question box so I can get to them. Okay, Ansel Michael's close inside the box. Pat. Okay, so let's talk about, we have webinars dedicated to this in our subscriber area. Some of them are, if you look for them in the subscriber area, it's called Good Box, Bad Box, where we go into detail about where and how to draw region boxes and when they're good and when they're not good. Now here, these are examples of very good boxes. It's more, it's not how many bars are inside there. We can't really predict or think about whether it's going to be 2 or 3 bars like you got here. Here looks to be about 4 or 5, maybe 6 bars, depending on when you start drawing that box. And over here you had, excuse me, hold on one second, please. Over here, I don't know, it looks like maybe a dozen bars inside of here. Yeah, so it's not, yeah, as I said, it's not the quantity of bars. It is more the location of the bars and the for lack of a better term, the cleanness of the top and bottom of the candles. What I mean by that is this. Let's blow this up so we're really clear when we talk about these. And we'll look at examples of boxes that weren't good. So we're all on the same page with this. Can you see in this box right here how the top and bottom of the candles are all kind of pretty much lined up together, allowing you to draw a very nice, clean, tight region box? So it's about the position of the bars themselves relative to each other that form a nice box, and the size of it. So for instance, here the bottom of the region was at 452.30, and the top of the region was at 52.35. So you're looking at like a 5-6 tick region box. That's a really good box. Think of it this way. It's like a coiled spring. If you think about a spring, when you push a spring down and it's not very tight, it's still kind of loose. When you let go of it, you don't get much reaction out of it. It kind of goes blah, right? Now, when you take a spring and you compress it really down tight, like as tight as it'll go, and then you release it, what happens? The spring flies all over the place, right? So you think of region boxes like that. If you have a box that's a little bit looser, this one was, let's see here, 52.13 all the way up here to 22. So this was 9 ticks, the size of this box, 9 ticks. This is pushing the top end of acceptability because there's a fine line between having a coiled spring, which is the region box, and having what we call a breakout trade. And the rule of thumb is once you get over about 10 to 12 ticks, so for instance, let's say hypothetically this box was more like this. That's not a good box. That's too big, way too big. You don't want that. It's got to be pretty much under 10 to 12 ticks. You know, if you're about 8, 9 ticks, that's a good box. Preferably down around the 5, 6 area. Like here's another good one, 52.7 to 52.13. This was a 6 tick region box. Over here, for instance, this second long trade on oil, you know, 52.45, we looked at that one. 52, there's 7 ticks. Yeah, so those are all good boxes. 1242 pullback. There was a question on 1242 pullback. Let's see, where's 1242? Okay, that's a good question. Michael, hardest because there's really no box. Pat will do that. Pat's saying when the chart's moving in real time, how can we tell when a trade is really setting up and that we're getting a box forming? That's the next exercise, Pat. All we want to do in the first part of this one here was to get all on the same page on how and where the trades are located and how they work. And once we're all comfortable with that, I'm going to go into Friday morning and we're going to do an exercise where you're going to actually call the trades. I'm going to pretend like it's happening in real time, like the bars are coming, and you're going to actually type in a T when a trade sets up. But back to Michael's question. Now, I addressed this in Thursday night's webinar, but it's worth talking about again. There is some question in regards to depth of retracement. What that means is this. His question is related to this pullback right here. Let's take this move and break it into a couple of different moves. So, in other words, he's looking at let's do it this way. So, in other words, this is an overall thrusting move from here up to here. But you could make the case that it was broken into a couple of different movements. Here we had one thrust. We had a pullback into stealth. Stealth is this sort of snaky line. It's either green or red. In the case of an uptrend, the stealth will be green. It will more or less follow the price up. That's called the stealth line. So here's one, here's another one, got broken a little bit here. We have a shallow retracement that just sort of wicks the stealth line right in here. And his question is, why wasn't that a trade? It could have been. You could have seen that pullback as an opportunity to get in. Now, a word of caution. You have to understand that if you look at the depth of retracement of this move, pulling back, versus the depth of retracement of this move, pulling all the way from here back to the midband, when we take these trades, for our first contract, our target is the swing. So for instance, here the swing would be located here. Same thing here. We're filled long on this bar right here. And our target for the first contract is to fade. We fade it, meaning that we come within it, would be here. Now, they both have the same stop level. So let's say the initial stop is either 10 or 12 ticks. So the long stop for this trade would be, I don't know, down in here somewhere. Maybe. You know, depending on where you got filled. I don't know. Maybe in here somewhere. And the stop for this one would be 10 or 12 ticks below the fill here. So you're down probably in here somewhere. I don't know, let's do it more like this. So when you talk about risk return, and this is what we call meat on the bone. So when you talk about risk return, so here's your potential return on a shallow retracement. It pulls down, you throw a box on it, you get filled, your target's here. This is your risk. Your risk is down to here. In other words, if for some reason this flipped and took a full stop out, you would lose that 12 ticks. And your potential to gain, so what's your potential to gain? Say you're filled long here at 60, and you could get to 66, 67. So you're risking 12 ticks here to make 6 or 7 ticks. So generally speaking, a shallow pullback into here is really not. It's a higher risk, low probability trade. Many times in a strong push, you'll get follow through of that top. You can scalp out 5, 6, 7 ticks and make some money on it, but your risk is down here. Your risk is way down here, so your stop is here. Now, let's contrast that with this move here. Here, let's say you got filled here, 55, and then 46, so your stop's down here somewhere. Closer to 1 to 1. I mean, we really want 1.5, 2 to 1, but it's better, right? Here is your potential risk of loss, 10 or 12 ticks, and your potential gain is from 54 all the way to 67, 69. So that's 15 ticks. So it's a little over 1 to 1. So that's why we prefer deeper retracements to the midband, because you're going to find the distance from here, the outermost band, and generally where a swing is located, here, for instance, right here, it's going to be 15 to 20 ticks to get back here to the midband. So when you take a midband trade and your target is the swing or the top of the outermost band, you're looking at generally 15 to 20 ticks. And if your initial stop's 10 to 12, you're generally going to have at least a 1, 1.5, sometimes 2 win ratio. All right, that's enough on that. Does everybody understand what I was trying to show there? I was trying to show the depth of retracement. If it's very shallow like this, you can take that trade and scalp it. But you got to realize it's a much higher risk than waiting for a deeper pullback to the midband, like that. All right, now let's move forward into our next exercise, which is going to be trading Friday morning's crude pit open. I'm going to start with the pre-market session, and I'm going to advance the chart, and you're going to type in a T when you see the trade setup. Okay, you're going to type in a T when you see. Now, you don't have to type in long or short. You don't have to type in the tools you're using, region box, whatever. You don't have to do any of that. All you'd have to do is when you see what you think is a trade, you type in a T. Okay? Here's the crude pit open on Friday morning. This is the pre-market. Here we go. We're going to start the set. This is pretending that live data is coming at you. Let me blow it up a little bit so it's a little more clear. So we're looking from this point forward to the right. This is 5:34 a.m. Pacific time. The pit opens in 26 minutes. We haven't started yet, Rude. No, don't start typing in T's. We haven't started yet. All right, now let's start. Now I'm going to move the chart forward. When you see a trade, type in a T. Okay, now here we're at 6 a.m. Pacific. This is the crude pit open. Gary would have opened the room right in here. So you're in the live room, you have your charts up, and you're ready to make some decisions. You have your chart up on your screen, and you're in the live room, and Gary is watching crude and calling trades. Okay, here we go. 6 a.m. Remember, when you see a trade set up, you don't have to say what it is, just type in a T. All right, I'm going to stop it there. Now that was an interesting exercise. If you let me give feedback to the team this morning as follows. Some of the earliest of you, and that would include looks like Chris, Rude, Roger, Adam, Pat, Carl, and Chris, put in a T as early as these bars right here. They had already typed in a T when I showed that. So you were actually just going into the pit open. The live room would have been open, and the box was forming right here, just like that. These were the earlier adopter T's right here. And by the way, you were correct. That's where the trade actually started, right there. That's the region box. So when you see these bars forming, when you see the region bars forming right around the midband, after you've had a move down or a move up, and they're sitting right here, this is the trade opportunity set up with the region box right here. It's right here. So when this showed up, that was the T. You should have typed in a T. Bam. Now, some of you didn't type in a T until you saw these bars right here. right? I would say that some T's, which would have been later T's, and that's okay, start showing up right in here. And I would say that's correct also. This is also a T. The trade box went basically from here all the way over to here. That's the T, the region box, perfectly acceptable trade setup. Bars right at the midband. The box is not too big. It went from 44 to 45 to 52, 7 ticks. Size is acceptable. Location is perfect at the thing. Top and bottom is pretty clean. That was a perfect region box right at the beginning of the open crude pit on Friday morning. Now, all due respect, some of you didn't type in a T until like up here somewhere. That was not correct. Okay? Here's why. It's too late. You're getting in too late. The move has already been made. In fact, those of you who took this region box were already peeling off your first contract up here. This is the thrust part of the move. Remember we discussed thrust and retracement, right? We have to visualize things like this. In our minds, we have to allow ourselves to think of markets as thrusting, pushing in a given direction, and retracing. Pushing, thrusting, and retracing. Retracing generally involves consolidation somewhere around the midband, and this is where we deploy our region boxes to get in. So if you're calling trades and you're seeing trades and they're way up here, that could be an issue that you would need to work on, right? Because now you're getting in when the thrust is made. You have to wait for another pullback, and turns out we didn't get one. This thing turned out to be a rocket ship. This was a huge trade. In fact, who was saying that they caught this, that they were called in the room? Is that you, Michael? A couple of you said that Gary called this and took that box, and most of you got this. Chris? Some of you? I mean, this trade, I don't know where you got filled on here. It looks like 50, some between 52 and 55 long. And then up it went. I mean, even in Christmas, this thing went all the way to 53.33. What is that, 70 ticks? One contract on this would have been almost $700. Two lot would have been $1,400. This was just a monster killer trade right out of the gate here. Now you can see here that this was your second opportunity to get in. Right here around 7:15-ish, you can see we had another pullback here. And you had a nice little region box that was about 4 ticks above the midband where you could have got in. Were these shallow retraces enough to take it? It's hard to say. In other words, you had a thrust here, you pull back to just into stealth. Could have taken that? It's possible. You would have got a scalp off here and then rode the rest up. And then your only other opportunity was over here around 7:15, 7:20. Okay, good. All right, that's I don't want to spend the whole morning on crude. Let's get some other charts up here. Any other questions on crude from Friday morning? Any other questions? Michael says he got it at 51. Best trade he saw. Good. Most excellent. Let's get gold down here. Okay, I'm going to load up the gold chart. And we can take a peek at it right here. By the way, as with any instrument, I would suggest that you practice it in sim as long as you can until each instrument's personality is a little bit different, right? NASDAQ's different than the Russell. Russell's different from Weimar. And gold is certainly different than anything else. Gold can sit there for a while and not do anything. Let's do that same exercise with gold. Okay? I'm going to do 2 exercises with gold. We're going to do the pre-market, and we're going to go into 6 a.m. where the room was open, and you are going to type in a T. This one's going to be harder. Okay, I'm not just going to lob softballs at you all morning here, okay, because the real world isn't like that, right? I mean, when you get live data coming at you and you're trying to decide what to do, sometimes it's not easy. You know, those crew trades were softballs. I mean, that was just a softball sitting right for you to nail it. This one's not going to be so easy. Okay, you ready? Here's gold on Friday morning. Now you type in a T when you think you see a trade. Okay? Here we go. Okay, just to help you out a little bit, this is the early morning session on gold. Midnight Pacific would have been right about here. So you had all this movement on gold. A little push up, bounced around a little bit, came, sold off, and now in the pre-market, you're within 12 minutes of opening the live room at 6 a.m. Pacific time right here. Okay? And let's advance the chart. Now, when you see a trade, you type in the letter T. Here we go. Blow it up a little bit here. 553. Gary's opening up the room. 558. Six o'clock. 6:10. 6:08. Let me expand it out a little bit. All right, let me stop it there. Let's get our orientation down so we can see where we're at and how this unfolded on Friday morning. Room opens at 5:55, so that would have been somewhere right about in here. Some of you typed in a T when these bars formed right here, and that was correct. Now, you would say, well, now hold on a minute, Mr. Charles, man. You talk about, we spent 42 minutes talking about region boxes at the midband. That's not a region box at the midband. What is that? Well, now in the pre-market session, what is a quick 5-second question for the team? In the pre-market session, what do we do before we start trading? What's the first thing we do when we open up our charts and we start looking at the pre-market? What do we do? What's the first thing we should do? Come Monday morning, you wake up, you fire up your machine, Ninja gets going, you get some coffee, you're all excited, I'm going to make some money today, and what do you do? This should be a routine for everybody, yes? Don't think about it. You draw your lines. Yes. Now, I intentionally didn't draw any lines on this for that reason, because I wanted to see if anybody could envision where the line should have been, because that would have helped you take this trade. Let's do it together. So what you do is you just pick out some areas where you see some candles sort of clustered together. So I see a little cluster here, I see a little swing right there, and I see a pre-market swing right here. So I'd go ahead and put a line, I don't know, probably somewhere right in there. You don't have to sit there for 20 minutes and hyperanalyze it. Just find some clusters of candles and put a line on the chart. It's really that simple. Now, you could make the case that there's two levels of support. You could say there's one kind of down in here, around that swing right there, right? Down around here. See it? This is in the pre-market session. You're just turning the chart on. And then, of course, you see there's another swing down in here. So in this case, when we started up the gold chart, we had 3 lines, and they look like that. So when we start to look at trade setups, if the market stays in this area right here, or if the market stays in this area right here, we are said to be what? In other words, the question is, if a market stays within the confines of the lines, it is said to be what? Is it trending? If it stays in these lines, is the market trending if it stays in the lines? Or is it something else? It's range bound. Yes, you are sideways. There is no trend. Sideways, range bound price action means lack of trend. There is no trend. So now we trade a range completely differently than we trade a trend. A trend, we buy and sell pullbacks. right? We buy and sell pullbacks. Market pulled back, get the mid-band, we did the box. We just looked at a half dozen trades like that. Ranges are different. What we do is we buy and sell support and resistance inside of the range, and we do it at the extremes, right? You're buying and selling support at the extremes of the range. Generally, this would not involve a mid-band box because the mid-band is in the middle of the box. And so if you're trying to get in a mid-band box, it's going to be tough because, I mean, there are cases where if you had a little bit large, if you got a large enough range, yeah, and you get a little box at the mid-band, sure, of course you could take that. Absolutely. I'm not saying that completely rolling those out, but, you got to have a decent size. So what happened here was, let me blow this up so we're all clear. Those of you who typed in a T correctly saw that we were in this range here, right? And that these bars came right into the sweet spot of touching the support area right in here. So yes, in fact, that was the first trade of the morning right there. Long out of that box. And of course, where would our target be? We want to see it get back up here. Good. All right, let's do this. If there's no questions on that, by the way, there was a second trade, and I think some of you typed in a T. Let me advance this chart and address the second gold trade, which was a case where you did have a region box. Some of you typed in a T over here. And I think that probably would have been acceptable right in here. Some of you typed in a T over here. There was a little bit of meat on the bone, not much on the long side. In other words, what we mean by meat on the bone is that we're saying that when you get filled, that you want to see at least enough to get a scalp off at the top and a short scalp at the bottom. Pat, they are at the swings. Yes, they are at the swings. The lines will be located at the swings. And a quick word on that. I've said this in lots of webinars before, but let's be clear about it. We're looking for a preponderance of candles in a location. All right. In other words, it's very rare to see a case where a swing level will be in other words, think of it this way: all the bars are not going to come perfectly to your line. They just aren't. Okay, we have to accept that. We have to realize that markets are fluid; they're constantly moving. You're going to see clusters of candles here. You're going to see a poke of a candle on a swing like that. You're going to see a couple of bars poke up like this. So it's not perfect. All right, it's not perfect. It doesn't, it's not going to be right on the button of the swing of the perfect of everyone going right to it. It just doesn't work like that. You have to find something that's pretty close to where you think it is, and then just simply put your line right there. All right, and realize that we're talking about an area of support and resistance, not a number. Everybody wants a number. So what's support? Is it 67.50? Is it 67.20? Is it 68.10? Where is the exact line where that is? Now, in the room, we might call out a number for simplicity's sake. We might say, yeah, I see support and resistance. I see resistance on gold at 67.80. Now, when we say that, we're actually talking about an area. In other words, it technically could be a little under it, and it technically could be a little bit above it. Likewise with support. Here we have a whole slew of candles sitting down here. And we have a swing established right there. And so, yeah, when this came down into here, that was a trade. Right. And, of course, this one was an outlier because you have a swing down here. There wasn't a whole lot of candles down here. Now, look, I don't want to – I've only got about 10, 12 minutes left in here. I can't spend 10 minutes talking about the perfection of lines, support and resistance. I see your questions coming in. I understand that. We've got about 5 other trades that we need to cover. So let's just table that for another discussion for next week. If you want, I can devote a chunk of the next webinar to support and resistance lines, okay? All right, good. Okay, good. Let's go ahead and move on. Let's do gold. Let's keep doing gold. Let's move on into the later in the morning on gold. And we'll do the same exercise. We're going to start right now. So for the purpose of this exercise, we're not going to look at what happened in the prior to what we're showing here. Okay, let me bring this up right here. All right, now we're looking at gold right around 7 a.m. Pacific. So what I'm saying is that all this pre-market stuff and the lines and support and resistance and these trades over here, those are all done. Those are done. We're not looking at these anymore. Okay. Now we're focused right here. This is what gold's doing right now. 7:01. Now I'm going to slowly advance the chart as if we're watching it together on Friday morning. And when you see a trade, you type in a T. Ready? Okay, here we go. Open it up, expand a little bit so the bars are a little bigger. Okay. All right, here we go. Blow it up a little bigger so the bars are bigger. Let me get it vertically adjusted. There we go. That's better. That's better. Here we go. Okay, now we're at 7:02. I think there was some news on Friday morning. I can't recall exactly. It might have been a Michigan sentiment number or something. I think there was some news that caused the market to pop a little bit here. Okay, we're still going. 7:02. 7:03. 7:05. All right, let me stop it right there. In this case, there was actually two trade setups, and some of you caught it. Some of you caught the setups on gold. Here again, let's recap what's happening here. At 7 o'clock, we got some news. I believe it was favorable. I can't remember exactly. We'll go look at it in a second at what it was. What was good about this exercise was that I started to reenact the live data in here, and nobody typed in a T, which is good because this is the thrust of the market pushing up from here. So we all see that the trade would have been somewhere down in here, either a box here, a box over here. However you did it, you were already in a long trade because I started showing this right about here. So nobody typed in a T right there, and that was good because you were in the thrust part of the move already, yes? So what I'm saying is this, and hopefully this will be helpful. Anytime you start looking at a chart and you look back at the data before the current bar, you have to assess the market condition and whether you're in a thrust or a retracement from when you start looking at it, right? So in other words, let's suppose you didn't even really start looking at gold until around 7 in the morning. Like you didn't see all this. I mean, you're seeing it now, but, and you see that it's way up here. You should instantly know that you are in the thrust. Yes? You can see it, right? Everybody can see that we are in the thrust part of the move. And you have to look back and say to yourself, now where would I have gotten in that? Where should I, if you're not already in the trade, where should I have gotten in that trade? And you can clearly look back and see there's some consolidation here. And you'd say, hopefully to yourself, something to the effect of, I see, we had some little consolidation around the mid-band. We're blasting up out of that, and now we're in the thrust part of the trade that actually set up down here. So a natural part of that analysis is saying to yourself, I know I need to wait for a retracement. I can't be taking this trade up here. I can't get in here because it's going to pull back and get my stop and kill me, right? Which everybody did. Perfect. Now, when we came up here, there was a couple of you that typed in a T with these bars right here. There was a few of you right here. This pullback, this shallow pullback. Now, we discussed this a few minutes ago, I think, on the crude chart, right? You can take these shallow retracements if there's a very powerful move. If the market comes into stealth or line 6 in the case of an uptrend and pauses here, You can throw a tight box on there. In this case, it would be long only. Long only simply because you're in an uptrend, bars are green, you're stair-stepping up, and you only want to catch that part of the trade. What I mean by that is this, is it's quite possible it could retrace deeper down into here, and you don't want to be short. Everybody see that? If you're going to take the shallow trade on a pullback into stealth, you pretty much have to stick with whatever that trend is on that box. Otherwise, a deeper retracement is going to come get your stop, and it's going to be a bad trade. You need to stick with the trend on the shallow retracement pretty much. And you got it. It popped up and took it out. That turned out to be a good trade. For those of you that typed in a T there and saw that shallow retracement, that turned out to be a decent trade. And you can use a tight stop, Michael. Yeah, absolutely. Yeah. So, as I said, in this case here, it was enabled long only, so you're filled long. Probably on one of those bars right there. Just to be clear what we're talking about here, so we're all on the same page. Yeah, so you're long only, so you're filled long, and it turned out gave you a pop, and you got a decent trade out of it. Now, you did not have short enable, so you're not looking for shorts, and that is to ensure the fact that if a bar closes below your region box, that you're not filled short. You don't want that. And furthermore, to Michael's point, your object trader is going to put your initial stop down here somewhere at 10 or 12 ticks below your entry, and you don't need to do that. You can suck that thing up real tight. I'd go a tick or two under the bottom of the region box. In the event that for some reason something happened and it flipped against you, you don't take a full hit. Maybe you only lose 4, 5, 6 ticks. Everybody understand that? Well, Byron, true. In this case, I'm simply showing the price action as an example for the trade itself. On gold, right after news came out at 7 a.m., it would have been moving too fast to do it. Correct. Yes, on this particular example. On other examples where a market's not moving so fast after news, just to show what I'm saying here. News came out at 7 o'clock, so that was like right here. All these bars painted in like a minute. I mean, here's 701 over here. So this is, yeah, it was shotgunning. No question about it, it was shotgunning. But I'm trying to show it as an example of a trade. In a slower moving market, you can take those. That's what I was trying to show. Now let's keep advancing here. We go up and we hit this swing at 72.70. The bars are retracing, and we get these bars right here. Now many of you in here this morning called out a T right here. When those two bars showed up, many of you, I don't know, I have an exact number here, but many of you typed in a T right there, and that was correct. There was a trade, that was a region box setting up. Depending on how tightly you drew it, you could have in fact been filled long on the close of this bar right here. And that was a legitimate trade. Yes, I'll give you that. That was the trade entry. That was the T I was looking for right there. Now let's advance it some more. Notice that the early adopters who took that T got a pop, and it almost got to the top of the range right here. Now, by the way, this market was slowing down here, so this was a takeable trade. In fact, I think we called this in the room. I think we did on that pullback. 701, 702, 703. Now you're at 704. So the market's slowing down a little bit. Now you get another bite at the apple here. Those adopters here who call out the T were correct. There was a T here, yes. Now look what happens here. Then some of you typed in a T right over here. Right in here. And that was correct also. Because sometimes markets will do that, right? You'll get a, and you've seen it, I'm sure, scores of times. You get a thrust. Well, here you get a thrust, pull back. You get another thrust, pull back. We get another thrust, pull back one more time. There was your trade. Some of you called a T, and that was correct. And then it goes and takes the swing out and pushes higher, just like that. Good, good. You feel like you're starting to see these, everybody? I try to do these exercises so that we try to recreate real time on the screen, so that when you start seeing the pattern set up come Monday, and next week when you're looking to take these trades, that you start to say, okay, yeah, no, I see that. It's pulling back. Look, there's some yellow bars. It's right around the midband. Hopefully in the room we would have called it out. We would have said, hey, gold pulls back in anywhere around 1270, 50, 1270, 70, and it bounces. I'll be looking to take a long there on a pullback. And then you can go on your chart and you can look at that area too. We're almost out of time. Do you want to see one more? Let's try to squeak a couple more in here real quick. What do you want to see? Go ahead and type in an instrument. Let's go ahead and whatever the consensus of the team is, we'll throw one more chart up here real quick. You want to see Nazi? You want to see Weimer? Whatever the team vote is here. Let's try to squeak a couple more in real quick. I know we're out of time, but let's go ahead and we'll do an extended little session here. What say you, team? Okay, we got a lot of Nazis coming in. Michael, yeah, that's true. That's coming out today. We're gonna. By the way, we're gonna do a heads up here. We're gonna do like a little open house thing for a couple of weeks for those of you that are visiting. I see Michael and some fresh faces in here today, and we are gonna do a free trial for 2 weeks. I believe starting today or tomorrow. Yeah, so 2 weeks from today or tomorrow. So it'll be through the end of not this weekend, but next weekend. We'll do, and we'll give all the tools. We're going to give all the tools, Object Trader, all the indicators, everything. Get the full package. You can come in the room, trade it with us, come to all the webinars. I'll tell you what, let's squeak in a Nazi, and let's see if we can get an RTY in here too. So that'd be starting today. Let's start with the Russell. Let me pause the screen, get old Roosty Bird on down here. Now, Nazi was tough on Friday. Why was Nazi tough? I'll show you in a few minutes. Well, she ran 300 ticks up into the open, pulled back a couple of times, and then ran another 300 ticks up in the rest of the day. So, let's start with the Russell. Russell is RTY. We like Russell because it's a little smoother than NASDAQ, and you still get decent movement. So the movements are going to be about half that of NQ. Okay, they're both $5 instruments, but if you get a 40-tick run on NASDAQ, you're probably going to get about a 20-tick run on the Russell. But the price action tends to be a little more smooth. Okay, let me clean up the Russell chart. We'll start with that. We'll pop a couple of trades up, and we'll look at Nazi, and then we'll wrap. Stand by, please. 1 second. Cleaning up the Russell chart. We're going to have to move fairly quickly. All right, I'm going to start it like this. Yeah, it was reaction to this year. That's correct. There was some monster earnings on Amazon and I think Google. Yeah, and the market just loved and it rocketed those two instruments and it took NASDAQ took everything with it. So let's get oriented here. Let's see here. Midnight Pacific time would have been on this chart right here. This is the European session, the pre-market. This is the market getting ready to open in the U.S. session. 6 o'clock is right here. It opens at 6:30 Pacific. So going into the open at 6 o'clock, what are we thinking? Are we thinking longs or shorts here? Just type in an L or an S. You got 5 seconds. Going into the open, over here, are we looking for longs or shorts? So type in an L or an S. 4 seconds. Just hit a letter. Long, short. Pick a side. You got to pick a side. I mean, that's how we do this, right? That's how you learn. That's how you look at charts. You develop an understanding of what's happening. You form an opinion. You decide, I'm looking for shorts. I'm looking for longs. And then you trade accordingly. If you don't do that ahead of time, or you're in a range, right? We talked about a range. I'm buying here and I'm selling there. I'm in a range. If you don't do that ahead of time and you cast your lot to the wind, well, then that's how your trade's going to wind up. I'll react to whatever I see, Charles. That thing moves up, maybe I'll get long. Thing moves down, maybe I'll take a short. I'll have to see what happens. Well, that's going to be challenging for you. Trust me. So in this case, we're looking for shorts, right? The market's broken support, and we're looking for some kind of pullbacks to get short. And I'm going to advance this because this isn't necessarily what I want to show. But here you can see some trades setting up. Pull back short, pull back short, pull back right into the mid-band short. Obviously, everybody sees that one. Clear as the nose on your face. Good short right there. And off you go. It was pretty choppy, but it was heading down, right? And there was some shorting opportunities on the Russell early in the morning there. Now, knowing that, I'm going to now do our exercise together. You type in a T when you see a trade. Ready? Anticipate to participate. That's right, Nasir. Who came? It was Manny, I think, came up with that. Anticipate to participate. Yeah, so that's a good saying. I love that saying. So whenever you got to plan ahead a little bit and get ready. Okay, here we go. We're going to do this exercise on the Russell real quick. You type in a T when you feel there's a trade set up. Advancing the chart. Advancing the chart. Blow it up a little bit. Let me pause for a second here. There was a trade set up here. It was one of those more shallow. There was a couple of them. There was obviously one here. There was the one over here that we showed ahead of time, and there was the one that it happened pretty quick, but it was right here. That was a trade. That was a monster short, by the way. We took that in the room. I think I recall taking that trade, made good money off of it. So that was a T. All right, let's keep going. It's all right. Blow up the chart here a little bit. Blow up the chart so we get a good chance to look at all the larger bars. Let me pause. Ladies and gentlemen, what was this? What was that? Here, I'll help you out a little bit. This was what? And then this was what? Fill in the blanks. This was what? And this was what? What do we call that? And this is what? That is the trade. This is the thrust. This is the retracement. Yellow bars. Tight, beautiful little textbook region box right at the midband. Setting up a beautiful short trade right here. It panned out very nicely. That was the T. Some of you got it. Hey, let me pause for a second. Are some of you having trouble seeing that when it happens? Is there something holding back from? Because not everybody typed in a T. I was surprised when these bars were forming. Some of you typed in a T. So obviously some of you are seeing it, and maybe some of you are just not typing. Maybe you see it, but you're just not typing in the T. I can't really tell. I'm not a mind reader, obviously, but some of you aren't typing in a T. So is everybody seeing this? I mean, that's the whole reason we do these webinars, is so that you can see these trades. We pretended like we were in real time, right? And you saw these bars come and sit right here. Everybody saw it, right? Was there some ambiguity about whether that was a trade or not? To me, that was clear as a bell. This is a short setup. This is a textbook read. This is about as good as it gets. I mean, 6 yellow bars perfectly sitting on the midband. I mean, it doesn't get any better than that. Yeah, the trade was called in the room. Yes, we took that. I traded this. I made a good money on this huge sell-off on the Russell. Great money. And these were all called. I know I called most of these trades, almost to the tick. And I took them with multiple contracts. This is how you make coin, trading futures. I mean, if you went into Wikipedia and say, how do I make money trading futures? It would show this chart. And it would tell you to short every retracement, every single one of them. Anyway, yeah, it was called Minaj. Yeah, I know it was called. I called it. All these. All right, tell you what, let's do one more, and then we'll wrap. Let's do one more. I'm not. Don't get me misunderstand. I'm not frustrated. I'm not. I might, get sense a little excitement in my voice. I am passionate about this. It's a chance for everybody to make really good money, and I just want to see everybody take advantage of it. Okay, let's do one more. Let's do one more. All right, I'm going to advance the chart, and we're going to do a final exercise pretending to be real time on the Russell. You're going to type in a T when you feel there's a trade. Ready? Okay, we're not counting this one or any of these other ones. We already did those. Okay, so we're moving forward from here. Here we go. Let me blow the chart up a little bit here. Okay, here we are at 6:57, so we're still ahead of the news. Blow the chart up a little bit more. All right, let me stop it there. All right, there was actually 2 trade setups, and a couple of you caught the first one, and many of you caught the second one. Okay. Now, what happened here is this. Notice that in this move here, we stopped out of the short. So we got our scalp off. We didn't quite get to the bottom, so it's a slightly higher low. I believe we got stopped out in here on the second contract. So we got the scalp off on lot 1. If you had 2 on, you got stopped out on the second one right there. Now notice in here, we did not pause at the midband, so that is not a trade. It did not stop there, unlike here, where we paused for some period of time, a few minutes actually, and we got time to draw a region box and catch the short, yes? Here that didn't happen. Now, some of you might be concerned that these bars have thrust up, changed the background to green, and taken this swing level out right here. And that's good. Now, we have a what this is called. So let's frame this in the context of what's going on in the whole market. The market's been selling off since way over here in the pre-market. Russell sold off most of the morning, right? Here's the pre-market sell, short, 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 short. We know that, right? But now we come back up to this outermost band on our retracement. Pretty deep one too. What is this trade called? Pop quiz for those of you who know. What is that trade called? And is it long or short? There is a trade there, by the way. What is this trade called? And is it long or short? It's a phantom trade short. Exactly correct. Because what happens is we are still technically in a downtrend, and this is a deep retracement on short covering. This is not buying kicking in yet. This is short covering. We used to call this blue or deep bar probes. Remember the old days? Now, I understand a lot of you don't want to, many of you don't want to take that trade because you're nervous that the background has turned green. You've come all the way to that outermost. Hold on one second, please. You're all the way to the outermost band, and you're nervous shorting this. Now, we know that when you take that short, that phantom short, your goal is to get it at least back to the mid-band which you did right there. So that was a bona fide good short, and that was a T, and some of you caught that and typed in T up there. Good. The other of you who didn't catch that, which is okay, typed in a T when these bars formed right here, and that was correct. There was your box. There was a region box, and the phantom set up here, and the next trade was here. So the T was right here. Now, we called this in the room, and at the current configuration, coming off of a huge sell-off, a big phantom trade short, and you're sitting right at this support level, I think we said let it go either way, meaning that you could take the short if it broke here, and you could take the long if it broke up here. This is a tipping point for the Russell right here, remember? And of course, you can see we were filled long on this bar right here, and it went up, and it took that swing out just by a few ticks. Pulled back, and then continued to ascend higher, and pretty much went up the rest of the day. So, you know, each instrument's personality and volatility and price action is a little bit different. You know, I'm sure if we pulled up a NASDAQ chart, and unfortunately we're not going to have time for that. I'll look at NASDAQ next week. You know, when you get, you know, good trending moves, you'll get thrust, and you'll get sometimes a shallow pullback. So yeah, that was another trade right there. This is getting long in the tooth. It's 7 o'clock. We're trading. I think it still had the room open. Here's another retracement here. This is another long trade. I think we called that one too. That's the advantage of being in the live room. You know, we're all trading this together. I'm taking the trades. Gary's taking the trades. We're calling them out live. You know, and just a point of clarification. And I'll say this next week too. The purpose of the live trading room is not to tell you where your trade is or where to get in. Technically, we are making trade calls, but we're trading it ourselves, and we're showing you where support and resistance levels are that you could look at taking a trade. But here's the difference, and I want everybody to listen to this. When we say these levels out, these are levels that you should already be seeing yourself, right? You know, when we say I'm going to box it in around the mid-band, around 14.95, I'm going to let that box go either way, or I'm looking for a short, or I'm looking for a rollover at 98.50. You should have your chart up if you're trading the Russell, and you should see the same thing that we're seeing. That's why we do this training. We do the training so that you see the same thing we are. And what we do in the room is we're confirming what you already knew that you should be doing yourself. Okay? That's the way that works. You know, you can't just completely rely on somebody else making your trade calls for you. That's why we do these exercises, so you start seeing them yourself. And then when you hear the call in the room, you're like, oh, yeah, you know what? If it came up on there, I was going to short that. I see that. I'll take that trade. All right, I'm going to go ahead and stop the recorder. Thank you for coming, everybody.